Hi, everyone, and welcome back to a virtual episode of the Talk of the Town by TheBlock, where we sit down with very interesting people to talk about very interesting things. Today's guest is Andrés Soltermann. Thank you for being with us today.
Thanks for hosting me. I'm excited.
Of course, same here. So, Andrés, you're the co-founder of Edel Finance, yeah?
Correct.
Amazing. So if you could give us an introduction to yourself and to Edel Finance, what you guys are doing, maybe a little bit of background of how you ended up getting into this space.
Yeah, so my background is in software development. I got into crypto in 2016, right before the first real altcoin season started. It was very interesting times. I was still in school back then. Friend of mine told me about Bitcoin, about altcoins. I had a little touch point before 2016. I was like mining Bitcoin back in 2014 for a very brief period of time on my little laptop, and got in 2016, 2017, and then just stuck around. And then in 2021 or in 2020, when DeFi really started, this is when I got really excited because I thought it was really, really interesting and really exciting that you could finally do something with this magic internet money, right? Besides just like buying and hoping that the price goes up. So that really caught my attention. I was always under the impression that the number one use case for crypto is in finance, right? And DeFi started this movement. So I started a software company in 2020, and we started to build different DeFi applications. So we built yield aggregators, stable coins, and lending markets. And right last year, I was at a point where I wanted to see, okay, where do I want to?
Sorry, your
like
video is frozen. Do you mind turning
my
it
vid-
on and off? Yeah.
let me check.
Okay, perfect. Now it's working.
It's better again?
Yeah, it's better again.
Okay. So last year I was in a position where I was like looking into the market because DeFi kind of like cooled down, right? I wanted to see, okay, where are we going with this industry? And by coincidence, around the time, Robinhood made the announcement that they were going to do tokenized stocks, right? And to me, this was like a big moment, big inspiring moment, because you see for the first time a huge fintech company that has a lot of distribution decided to use blockchain technology not just to pump a coin, but to actually build a better product. And to me, it was clear that this is like that stocks are going to come on chain, right? And not just that, like one thing is to bring stocks on chain, like so people like you and me who are invested in crypto can now buy stocks for people who are like outside of Europe, the US, and have difficulties to access the US stock market can buy. That's all great, and that's a big part of why tokenization of stocks is really good. But I think the main beauty or the main value add for humanity comes when DeFi infrastructure can merge with equities, right? When people can use vaults, DEXs, prediction markets, lending markets, perpetual futures. All these are all instruments that are very native to us on chain, but very foreign to people who are just investing in stocks, right?
Yeah.
Equities are a way bigger industry than crypto is. Like crypto is sitting at $2 trillion of market cap, while stocks are at 120 trillion. So it's like 60 times bigger. Everyone who is like saving pension fund or has money in a pension fund, whatever, they're all investing in the stock market. So everyone has exposure somehow. And our thesis or our vision is that once there is sufficient DeFi infrastructure for stocks, that then you can really serve people. They can optimize their portfolios. They can invest better. They can get access to tools that only institutions have had access to. And that's what we do. We build open infrastructure for tokenized stocks. We started with the lending market. That's the first thing we launched. And right now we're building perpetual futures for equities on the Canton network, which is going to be really, really exciting.
Yeah. I have a lot of questions about everything you just said, but before we dive deeper into it, I like to play a quick game with my guests before we dive into everything just to break the ice and kind of get to know your standing a little bit. So this game is called Build, Kill, or Double. It's kind of like Kiss, Marry, Kill. So I'm going to give you 3 items, and you're going to say which one you would build on, which one you would kill, and which one you would double down on. Okay? So tokenized public equities, tokenized private markets, and tokenized funds. Build, kill, double.
Tokenized equities, I would double 100%. Public equities, super excited about that. The other ones was funds, tokenized funds,
and private markets.
Private markets, I would build on, and funds I would kill. Although all 3 are super interesting.
Yeah, of course, all 3 of everything is super interesting, but I just want to know where you stand. Next one. 1 is lending and borrowing on chain. 2 is leverage strategies like looping and carry. And 3 is long-term hold.
Wow. I would say double down on the looping, the leverage. I think this is a product that can actually really get adoption from retail, from mainstream, right? Like getting a 2x exposure to a stock without getting liquidated is pretty cool, and very easy. So I would double down on. Then lending I would build on. That's what we've done already. Yeah. And what was the other one?
Long-term hold.
Yeah, long-term hold. Come on, who cares? Kill that.
And the last one, permissionless DeFi protocols, regulated on-chain institutions, or a hybrid model?
Wow, I would...
I'm interested to see what you say on this one.
Yeah, this is very hard. I would double down on the hybrid model, because I feel like, I mean, we've seen it before. Like every single big crypto company started in the dark gray area. You know, like remember Tether, Circle. They started to do something when we didn't know what can be done and what can't be done, right? So they push the boundaries, and sometimes there is some damage. You know, they have to pay some fines left and right, but that's what it takes to really push and grow, right? And on the other side, you had a lot of things. For example, Polymesh. They were building STO, security token offerings on chain. They built like a security token chain, and they went too crazy on the regulation, and it never had the chance to grow, right? Hyperliquid is the same thing. Like they went super wild west, like just let's go, right? Let's come and trade and let's make some money, right? Let's build a business that actually works. And now that they are at a certain size, now they can see, okay, we want institutions, we want bigger players to come on board. Let's get some license here and there, right? So I think the hybrid model is great. Start off with as little regulation as you possibly can, and then once you really have to do it, then go the regulated path. So I would double down on that. I would I would build on permissionless and kill the regulated. Although, you know, like I think it's a journey, right? From unregulated to regulated always.
Yeah, absolutely. But I think a lot of people in this industry would probably have the same answer. I know I would. Okay, perfect. So now let's go back to Edel. Is it Edel or Edel? What's the correct pronunciation?
So Edel, the name comes from the Edelweiss. Edelweiss is a flower that grows in the Swiss Alps on very high altitudes. It's like known to be like a very resilient flower. And I thought, okay, I'll put a little bit of patriotism into the branding, into the name. So we pronounce it Edel. But in English, it makes more sense to call it Edel. So whatever feels comfortable to you. Some people pronounce it like this, some people like that. It's all good.
Yeah, I love it when companies have a nice backstory to the name. So I want to start off back when you guys were in testnet. I saw some really interesting numbers. 90,000 users on testnet.
Yeah.
Tell me how that happened. What did you guys focus on during that time? How did you make it so good that 90,000 people were there before it even launched officially. And how was that experience going into mainnet and actually launching the product?
Yeah, cool. So Tesla was interesting. We wanted to really stress test the whole infrastructure, which we definitely did. Being able to host that many people that come daily, like use your product. Like it's one thing to build software, and it's another thing to build software that can host thousands and thousands of users. We're seeing the same thing right now again with the launch of Runway. So we just launched the product again like a week ago, and we're stress testing it again. We're building on Canton now, and we see a lot of things break because Canton works fundamentally very different to Ethereum. So again, the idea is always to really stress test the infrastructure before you launch a product where people are putting money, right? Because that's what we are building. We're building kind of financial infrastructure, right? So we need to make sure that, when people put their hard-earned money into it, there is no infinite loading or stuff breaks and people freak out, right? Those takes a lot of burden from us and our support team to not have to answer to, people going crazy. So that was the main thought process behind it. An interesting thing we did different to other people on Tesla was like, we gated it in a way that you had to pay money to use the testnet, right? Which is like kind of weird. Usually people go the other way around and pay people to use the testnet. But then it was an airdrop that we've done, right? Always when you do an airdrop, you attract a lot of users, right? We also attracted a lot of like Sybil users that just try to like optimize and squeeze the most out of it, right? They had like their little systems to like game the whole product to make sure to get the most points to then get a big chunk of the airdrop. What we've done then was that we took a lot of time to identify which of the users, of the 90,000 users, were like really genuine users, like really high value users. We were looking at, okay, do they have money on their account, or is this just like a burner wallet that has like $1 on it and they just try to make as many transactions as possible? Those kinds of people we excluded, right? We didn't want to reward this kind of behavior. So we found 13,000 like really, really, really active users, like real users that really engaged and and those people we just rewarded with an airdrop. So we just did an airdrop like 1 week ago. We did it on the Canton network, and started with this other product that I just explained to you, that is Edel Runway, where people can again stress test the infrastructure on the Canton network ahead of the launch of the perpetual futures exchange.
That's really cool. I haven't come across a lot of founders that analyze the users like that and are also so open about it. Usually when we're talking to founders, they're like, yeah, X thousand, X million users. But it's very rare for someone to really analyze that and look at the behavior of the users and be so open about it. So thank you for that.
Yeah, it's important. I feel like in crypto, like people, as you said, like people want to flex a little bit with big numbers, but then like but we have builders or people who are really in the ecosystem. They know that all these numbers are like, what is a user really, but I think it's important to really focus on real people, not just fake metrics, but really go into like, okay, value and users and like real metrics.
Yeah, absolutely. So you mentioned Canton network a few times, and I know you guys were awarded as a Canton Foundation Featured App. Tell us a little bit about what that means, why it's important, and why was it on your target list to achieve that, or did it just happen?
Yeah, so I think first of all, I feel like I've become a little messenger, an advocate for Canton over the past couple of months. So Canton is a very interesting network. I personally came across Canton thanks to my co-founder James, who used to run a node validator company and like was very early involved with that network, providing network stability through running nodes as a validator. And Canton is I would say Canton is like the institutional chain. So when traditional finance, or if traditional finance comes fully on chain, it is most likely going to happen on Canton. So Canton seems like an overnight success. Many people have not heard about Canton when I tell them about Canton, and then I'm like, go check on CoinMarketCap. It's like number 15, like it's not like some little shit project, right? It's like it's a big deal, and most people have not heard about it or haven't seen how it got there. But Canton has been in the making. They've been building Canton in the background for the past 10 years. Like Digital Assets, one of the founding parties of Canton, they have been developing this new development language called DAML, Digital Asset Modeling Language, for 10 years. And they've done like beta tests and pilot projects for 10 years. They started to work before Ethereum really started, right?
I think they are just raised like $355 million this week.
Yeah, and like now people are like, whoa, okay, like they're big shots. So imagine for 10 years they were like in the game. Imagine a company in 2016 trying to pitch to banks that they should use blockchain technology. Like this must have been crazy, right? Like in 2017, 18, everyone wanted to speak to them. 19, 20, like fuck off with your little crypto stuff. We don't want to hear about it. Then 2021, 2022, everyone wanted to learn it again. So they went through quite the journey, and now they launched this network, this chain, and essentially they built this chain with all the features in mind that institutions will want to have on a blockchain, right? A JP Morgan cannot do a lot of things on a network like Ethereum because everything is fully public. Like you see every transaction that's happening. Mm-hmm. You see that a hedge fund, a big hedge fund like Citadel, they cannot trade on Hyperliquid because they can't have their positions public. So you need a private network, and Canton is private by design. On top of that, it's isolated. So you have like different nodes, different applications run on different networks. It's like subnets almost. And you need to be approved to be able to build on it. Like that's the difference. On Canton, you will not see meme coins. You will not see people deploying little Ponzi games. This doesn't exist because you need to apply. You need to go to the foundation, say, hey, foundation, this is us. This is what we want to do. Please, can I build on your chain, right? Yeah. And this means that now only 80 projects have been approved for featured apps in total, and we are one of them. So you have everything on Canton is around TradFi. So you have a lot of people issuing tokenized assets. You have a lot of people building trading infrastructure, lending infrastructure. So everything finance related, but not in the DeFi degenerate way where there is like farming and little cool pancakes and stuff. It's more serious, and it's catered towards institutions.
Yeah.
And ever since we fully understood what Canton is all about, it was our number one priority to be involved and to build on this network, because that's where the future of finance is most likely going to take place on.
That's very interesting. I had heard of them before, but I never knew everything you just told me. And obviously, I did a little bit of research before this podcast. But that's really cool that you have to apply to build. I didn't know that part. So very interesting. And
there's a filter. There is a big filter, right? Yeah. Like there needs to be a certain quality that has to be adhered to. And I think it's great. Like I had a discussion recently with someone where we were like, okay, is it really good to gate it? Because the beauty of Ethereum and Solana is that anyone can come. The combined consciousness of humanity can come here and build stuff, right? Yeah. And it can iterate quite fast. While on Canton, it's very gated. So we came to the conclusion that it's something new, it's very interesting, and it keeps the quality very high.
Yeah, I think it's needed. I mean, of course, we need both, but definitely a network that filters, especially when it comes for institutions. I think it's going to remove that fear factor that they all have about getting
Yeah.
involved in, bringing assets on chain, doing activities on chain. We needed something like this so that they would be like, okay, maybe it is doable.
Yeah.
So what are your plans on Canton? Are you planning on any expansions, anything else that's coming up with them that's interesting?
Yeah. So on Canton, the ultimate goal is to build, or the ultimate goal is to launch and become the main perpetual futures venue for equities, right? You're seeing now on places like Hyperliquid, on places like Lighter, you see that equities and commodities become more and more popular.
Yeah.
And to us, it was clear, like our main goal is to drive the adoption for tokenized stocks. Now, the number one use case that crypto has created is perpetual futures. It's the number one revenue generating engine. It's the most profitable business that crypto created. It's what if you look at all the companies, all the entities that are making the most amount of revenue, they all do perps. It's the centralized exchanges and it's the DEXs like Hyperliquid, like Lighter, Avantis, and others, Esther, and so on. So it was pretty clear to us that Canton will have a perp DEX. Our focus is equities and commodities. We will have some crypto as well for people to trade. Now, why a perp DEX on Canton? There are already great perp DEXs already. Hyperliquid is awesome. And all of them, they have like a similar UX. It feels all the same. Like, why do we need another perp DEX on another network? It's a great question to ask and my answer would be that Canton is the first and the only chain that has the chance to really onboard massive amounts of institutions. Institutions don't trade perps right now. They don't do that. Why? Or what else do they trade? They trade normal futures that have maturity dates. They have to roll over. It's a lot of accounting. Why do they not trade perps? Because they can't. It's like the infrastructure on which traditional finance operates can't handle the concept of perps. It just doesn't work, right? Although perps would be a way better user experience, and way less accounting headache and operational cost to like do these trades. So they are looking into these instruments, and ASIC is going to become 24/5 as well very soon. So it's going into this direction, and institutions will need a venue that is mega liquid on a network that is private, which is Canton. So our approach is the following. We flip the script. We're the only company on Canton that does this. We go hard on retail initially. Sounds weird, but we go hard on retail. We spoke about this before. All the big crypto companies start from retail, become bigger until they have so much liquidity when they can make the jump to become more institutional. Coinbase, Robinhood, Tether, Binance, all of them. Same path, same game plan, always. We will not change that. We will not neglect this growth or this go-to-market strategy. We're going to do the exact same thing. We're currently building out perp DEX on Canton, focusing 100% on retail. We are going to be able to offer the best user experience anyone has ever seen for a perp DEX because of the way Canton is designed. On Canton, you can build apps that feel, or you can build decentralized apps that feel like a centralized exchange, right?
Yeah.
If you go now to runway.edel.finance and you want to create an account, you don't need to have a wallet. You don't need to write down your 12 little words. You just put your email, passkey, you scan your face, and you're done, right? This is because of the way that Canton is set up with the party IDs. It has built-in account abstraction. We just realized this when we started to build it, right? We were like, wait a minute, this is so good for user experience. So we can create a DEX, Hyperliquid, where you don't have to bridge money from Arbitrum here and there. Most people don't understand how this works, all this stuff. So we can build best user experience initially, onboard massive amounts of retail, and then have the infrastructure in place where institutions are like, wait, I can't trade on this. Like I'm legally allowed to trade on this because they are not on public ledgers like Hyperliquid.
Yeah. No, that's a lot of companies that are building now, especially in the UI UX aspect, exploring embedded options, so that the user does not have to come face to face with a wallet or crypto or anything like that, because it scares them away. Like I was talking to my dad the other day. He understands crypto now. He trades it. He even buys meme coins. But before he started, he was so confused. Every time he was like trying to open an account, he would come to me like, what is this? What does this even mean? How do I move money from my spot to my future? Why am I having to move money between my own accounts? So it was so confusing for him. So it is a big step for adoption, not only for the institutions,
100%.
I think even on the retail.
It's funny. Like I was on a talk last week in Paris. I was pitching Edel in front of like a group of VCs, like a pitch competition, and I used this example. You know the mid curve meme?
No.
You don't know, like the mid curve, like the guys. The average smart people are like the most people, they have an opinion, and the dumb people and the smart people, they have the same opinion again. Yeah, you know. So imagine this meme, right? In the middle, where everyone is our little crypto bubble. These are the hyper liquid traders. They're the points farmers. They go on Lighter, NATO, all these exchanges. They go perp 50x long. They make money. Most of the time, they lose money. But this is our little bubble, right? On the left side, low IQ is like, I would say, mega non-crypto retail.
Yeah.
They want to trade perps. Why not? Like, especially now, the stock market is all-time high. Like, I want to trade 50x long Tesla, or I want to short it. I want to go whatever, right? People want to trade these instruments, but they can't because they don't know how to use it. I recently wanted to do a trade on I was sitting at home with my friend. We were like, oh, let's trade a little bit of Bitcoin. We were a bit bored. We just were like, okay, let's leverage trade a little bit. And I realized again, like I had to bridge money over from a chain to Arbitrum, top it up to Hyperliquid. Like, who understands that? Like, we do, yes, because we are native in this industry. We work with this stuff every single day. But it's hard, right? So you have these people on the lower end that are like, I want to trade perp, but I don't know how to do it. And then on the other side of the spectrum, you have institutions who also want to trade perps, but don't know how to use wallets as well. And these are the two people we are serving. We are not serving people who are already trading perps on Hyperliquid Lighter. We can use Canton for two reasons to onboard two completely different users. Number one, UX, we can onboard non-crypto retail. And number two, the privacy, we can onboard institutions at a later point.
Yeah, no, absolutely. Like I said, I think it's a great move to increase adoption among non-crypto native retail investors. So I'm very excited to see how that comes out. Now let's go back to Edel. And now I want to be speaking to people that might be interested in, using the platform, investing on the platform. And I just thought about some questions that I would have as a user. And I thought, who better to ask than the co-founder? So what happens to tokenized equities when when an action is taken on a corporate level, like dividend distribution or a stock split or something like that? How does that translate into the tokenized version?
Yeah, so there's two big issuers right now for tokenized stocks on chain. So you have X stocks and you have Ondo, and they work fundamentally very, very similar. The way that they work is that they basically have, so when you buy a stock, let's say X stock of Tesla, you are buying a tokenized SPV, which is a special purpose vehicle somewhere on some island that holds the stock.
Yeah.
Right. So it is one-to-one backed, but you're not really buying the stock. So you don't have voting rights, and that's with most of these platforms. Like also Binance, they just launched stocks like today. And it's always a similar kind of approach. You have price upside, so when my stock goes up, I get the price appreciation,
Right.
and now you have, for example, dividends, and then you have different companies that manage it differently. For example, with Ondo, the way that they do it is, let's say you hold one Tesla share and Tesla distributes a dividend. What they do with the dividend, because the dividend always is distributed in US dollars, they take the US dollars, they buy more Tesla, and they back the tokenized version of Tesla with more Tesla. So it works like wrapped stake ETH.
Okay.
For example, you have when you stake an ETH on Lido, you get staked ETH, and then every time there is staking rewards, you get more staked ETH. The amount of staked ETH you hold in your wallet increases.
Yeah.
But if you have wrapped staked ETH, the price of wrapped staked ETH increases over time against the underlying, which is ETH. And that's how it works with Ondo. The price of the tokenized version of the stock ever so slightly increases against the underlying stock, right? That's how they do it. X stocks, they have a different model. They do it like staked ETH, so they distribute. If you have one Tesla stock and there is a 10% dividend, after you have 1.1 Tesla in your wallet. They just stream more tokens into your wallet, but you can also wrap it, and then you get you have the same thing with Ondo, where it just increases in price. So you can choose what you want. That's how it works. And the same thing with a split. So if a stock splits, because they say, hey, we are too expensive, right? Like MicroStrategy did that a bunch of times. Yeah. They rallied, they were like $4,000 or $5,000, and then they just like split like 1 to 100. And now they're back to $40 or $4. And that it behaves the same way. So with the X stocks, you just lose stocks. You have less of it, but they are worth more, right? That works with oracles, and then with Ondo assets, the price stays the same, or the amount you have stays the same, but only the underlying changes. So like the price does not split really with Ondo. So it's like there is advantages and disadvantages with the two different models. Me personally, I think X stocks solves it a little bit smoother.
Yeah.
Because with Ondo, you will have the problem that at some point, let's say in 10 years, an Ondo tokenized stock will not have the same price like a normal Tesla stock, for example.
Yeah. That's true.
Yeah.
That's very interesting. Even I didn't know that. So now my brain is like running miles. I also want to talk about your Vault product suite. So your team obviously sent me some information about Edel and what you guys do, and that led me to the looping and carry trades. And I found them very, very interesting. I'm very excited to sign up myself and try it. So tell us about that. How did it come about? What is it exactly, and how are people making money off of it?
Yeah, so you have to imagine a big step forward for finance was the invention or creation of ETFs, where you had an ETF, a basket. People say what kind of stocks are in the basket. For example, the S&P 500, the top 500 companies, or the NASDAQ 100, top 100 tech companies. You have these baskets and people invest in them. It's the most popular way of investing, ETFs, because you're diversified by design. Now, in crypto or on chain, something we were working on something, or we created this concept called a vault. Mm-hmm. Vault is something very normal in DeFi. Like a lot of players, a lot of companies use vaults. Now, a vault is very cool because it's the same like an ETF. It's like a basket of assets, but a vault can do much more things that an ETF can't do. You can, first of all, anyone can create a vault. Anyone can create a vault, and anyone can become like an ETF issuer, which right now only companies like BlackRock and Standard & Poor and like big companies are really doing. So anyone can do that. Anyone can come up with their own stock investment strategies, but you can make the vault programmable. You can give it certain rules, and you can make it do stuff that can't be done with an ETF. So we call our Vault product, we call it like the ETF 2.0. It's like taking what ETFs did to finance and adding another layer of utility on top of it. So because the first product that we've built was a lending market, we were like, okay, you can do all sorts of cool strategies with a lending market which is too complicated for people to really grasp. So what is a lending market? What does this even mean?
Yeah.
You use something as collateral, you bring us securities, or you bring a security, and then you can borrow dollars, for example, right? That's the core concept. Now, what you do with the dollars will determine the outcome that you have financially. So you can use the dollars and you can invest them and buy more stock. So you put Tesla, borrow dollars, buy more Tesla. You have a leveraged position. You took debt to buy more stocks.
Right.
That's one thing you can do. The other thing you can do is you can say, hey, I borrow dollars at 5% interest rate and I invest them somewhere where I earn 10. Now you have essentially created like a money glitch, right? You're doing what institutional investors, big investors, professional investors are doing all the time. Have you read the book Rich Dad Poor Dad, or you heard about it?
Yeah, I have.
Everyone knows this book. That's what the guy is preaching. Like Robert Kiyosaki is preaching, take debt and invest in assets. And we allow people to do this on scale with stocks on our platform. So you take your stock as collateral, borrow dollars, and then you can invest in something else. Now you can do this right now manually, but we decided, okay, we want to take it one step further and provide like a more user-friendly interface to do it. It's like, imagine like an e-commerce store. Like you pick your product. Like, what's your product? Do you want 2x leverage on Tesla, 3x leverage on Tesla, or do you want Tesla plus 5% yield, or do you want Nvidia and 2% yield, or do you want this long 2x here, short 2x there? Like little products, right? Not infrastructure. And it's like, do it yourself, like have fun, right?
Yeah.
So that's what the Vault product is. And we have been in testing phase now, internal testing. We're going to launch the beta version maybe when this podcast is live. It should already be live, depending on when it's coming. But from now, it would be like plus in 1 week approximately.
That's very exciting. So what about the risks of this? What happens if the market goes down?
Yeah, so the vaults have an automated rebalancing method. So imagine if you do 2x leverage on Tesla, you have $100, borrow 100, buy more Tesla. Now you have $200 of Tesla and $100 of debt. So there is a certain point where you would get liquidated, right? If Tesla drops hard and you don't repay your debt or you don't manage your debt, at some point that your collateral becomes a similar amount than the debt, and then the system is like, okay, I have to sell your Tesla to cover the debt, so you're out, right? That's a liquidation. That's the main risk you have in these kind of products. But the way that our vaults are designed is that they automatically rebalance, so they're non-liquidatable, right? So if Tesla, let's say you do the trade that I just explained to you, $100, you borrow 100, buy more Tesla, you have $200 now and $100 of debt. Let's say Tesla decreases 190, 180. And by the end of the day, what happens is that the vault automatically takes some of the Tesla, sells it to repay the debt, so that the debt gets decreased. So it's always staying at 2x, because when the collateral falls, the leverage decreases, right? Like you're no longer 2x leveraged if you have $100 of debt but only $150 of stock. You're like 1.75 or 1.5x leveraged, right? So the vault automatically changes the leverage by repaying the debt or taking on more debt. So if let's say the stock increases in price, right, then it would basically borrow more money, right?
Yeah.
So it would say, okay, $200 turn into 220, then it borrows $10 more, buys more Tesla, so it like increases the debt, but also increases the collateral again. So it's like it automatically adjusts itself. So you don't have to do anything.
Are you using AI in any of this?
No, I mean, it would sound cool to say, oh, it's all AI powered, but you don't need AI for everything. Like this is super easy. Like it's just a normal algorithm. So it doesn't need intelligence. It just sees, okay, is the number bigger than what I should be, or is it lower than where I should be? Okay, let's change it. So no AI.
That's very interesting. You're very unique in the way that you've come about this, because I feel like I haven't spoken to a founder who hasn't mentioned AI in a really long time, and that's why I wanted to ask, because you didn't mention it. So I'm like, is there anything? So how long have you been testing this Vault products?
The Vault product is in production. I mean, testing for I would say 3 weeks now. We've been testing it, stress testing it, opening positions, closing, all that fun stuff, like watching how the market evolves and then like rebalancing all this stuff for 3 weeks now. So next week we have the beta phase.
How's the performance been?
Sorry?
How has the performance been?
It's good. It does what it should be, or it does what it should do. Like you have different products, right? If you buy 2x leverage Tesla, and Tesla went up 10%, then you got 20% performance, right? If Tesla goes down 10%, then you lost 20%, right? Yeah. So it's like it does whatever you want it to do, and it just amplifies it, right? It's just leverage. Yeah. And then the carry vaults, where basically you use a stock as collateral, borrow dollars and invest them somewhere where they earn more than what you pay, right? Let's say you pay 5% interest, but you earn 10 through the yield strategy. That's also it's just doing its job, right? It's keeping the leverage at a certain position and just making sure that the right amount of money is in these yield strategies. And if stock falls, that the yield strategy or money from the yield strategy is taken to repay the debts, just to stay safe. So it all works. Now we're ready to onboard the first group of users and then do like the full rollout until the end of the month.
And if someone watching is interested in being one of those first users, where can they learn more about Edel?
The easiest way is we just launched a new website. We are very proud of it. We put a lot of energy into that. So there, of course, you will find all the info. Literally since today, 4 a.m., we put it live.
Congratulations.
Then it's gonna be the Twitter. The Twitter is big. We're posting everything over there. And then if there's any questions like more specific, we're always on Discord or Telegram. There is always someone answering questions.
Yeah, amazing. And where do you see Edel headed in the next 5 years?
I want to become... So we grow with the growth of tokenization, tokenized stocks. The more this industry grows, the more it helps us. Now we're seeing a lot of things happening in this industry on a daily basis, which is super exciting to be able to be building in an ecosystem that is like really experiencing a lot of innovation and a lot of growth. So in 5 years, I mean, in the next 2 months, we're going to launch the perpetual futures product. I think this is going to become our flagship product, the perps, because that's what people really, really, really want to use. That's where people see a lot of value in. And we want to become the #1 perp venue for equities and commodities mainly. We want to be serving millions of users all over the world, and also institutions that want to do these trades. So we want to become the hyper liquid of Canton, right? In the next 5 years. Yeah, exactly.
Amazing. I look forward to that happening and hopefully speaking with you again when it does. Thank you so much for being with us today and giving us your time. It was such an interesting conversation. It was an absolute pleasure speaking with you. Thank you.
Thank you so much.
And thank you everyone for watching.